This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. Of course, in the overnight trade, futures were basically steady, but there was a quick jump in prices once we did get the surprisingly weak non-farm payrolls report coming in only up 148,000 compared to the guess of up 180,000. Normally, this would be considered to be a bearish factor for stock indices, with the economy weak is being reflected with these employment numbers. However, traders look at this in a different light. The feeling is that anything that shows a weaker economy will most likely influence the Federal Reserve to extend their quantitative easing program. Currently, they are buying $85 billion in treasuries and mortgage-backed securities every month. So in this instance, the bad news is the good news. More quantitative easing is coming from the Fed, at least as far as the duration of their asset purchases. And that caused stock index futures to advance, with some of the indices moving to new historical highs. This influence is likely to continue for quite some time. Also, we do have a new consensus view that the Fed could curtail their QE program possibly at the March 18th and 19th policy meeting. Our feeling is, with what we are seeing, that it will be later than that when the Fed actually does reduce their quantitative easing program. So all of this remains bullish for stock index futures. Over in the foreign currencies, seeing the dollar index falling to a new 8-month low. This directly linked to the weak non-farm payrolls report, which puts downward pressure on short-term interest rates, which hurts the dollar from an interest rate differential point of view. Also, we did see a new 4-month high in the Australian dollar, basically for the same reason. Interest rate differentials are favoring the Australian dollar and, of course, hurting the US dollar. So from here, I would look for additional pressure in the dollar index, and this is likely to remain a longer-term influence. Over in the credit markets, futures advancing. We did have, of course, the government shutdown, which had the impact of slowing the U.S. economy. That is bullish for treasuries. Also, this non-farm payroll report, a very bullish influence today, taking futures higher. So the fundamentals are on balance bullish for treasuries, at least over the short term. However, I think the best opportunities lie in the short side of the dollar index and the long side of stock index futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.